If you're at all like me, you do not like surprises, especially when it comes to one of the largest financial decisions you will ever make in your entire life. That's why I put together this video where we are breaking down all buyer closing costs so that when you get to the closing table, there are no surprises on that large financial decision. So, if you haven't met me before, my name is Chris Cox. I am a local real estate broker here in the Raleigh area, serving the entire Raleigh Triangle, as well as having a team working on the coast of North Carolina in the Wilmington market. So would love the opportunity to learn a little bit more about your house search and see what we can do to help you out. But again, we're going to focus today on closing costs. Like I said, I don't want there to be surprises. So let's get right into it. What can you expect for closing costs especially? So what are closing costs? These are additional fees that you are going to have on top of your due diligence, your home inspection, all that stuff that you're going to pay out of pocket, to get to this point. And then you're going to get some closing costs that are going to come along at the closing table, and they're going to be in addition to whatever your down payment is. So we're going to talk today about what you can expect with closing costs, and then we're going to finish off with what you can do about them and how you can actually negotiate some closing costs into your transaction, have some other people pay for it, as well as shopping around. So let's dive into closing costs today. Again, specifically talking about what you can expect for closing costs. So there are really 4 sections of closing costs that we're going to talk about, really focus on today. Number 1 is going to be lender costs. Sometimes these can be negotiable, depending on the lender. Some of them are going to be some fixed costs that are going to add to, what type of program you are getting are going to be included in those lender costs. Those aren't really going to be negotiable. Second one is going to be some government costs. Those are definitely not going to be negotiable. Third section is going to be some prepaid expenses. This I find is probably the one that surprises people the most, and we're going to talk about what those are and how you can minimize or just, again, depending on your closing date, how you can minimize those costs. And then your 4th section are going to be your professional expenses. Those are going to be, what expenses you can expect at closing, including, potentially having to, if you decide to work with a buyer broker, having some out-of-pocket expenses for that. And then, like I said, we're going to talk about what you can do to negotiate, as well as have others pay for some of these things. So let's talk next about specifically lender costs. So lender costs are going to be broken into kind of a few different things. The first one is going to be an origination fee. Sometimes they call this an application fee. It depends on what lender that you're using or that you're shopping around. This is going to be what they're charging basically to process your mortgage. This goes towards paying the underwriters, the processors, the people behind the scenes who are making sure that you're able to get that mortgage. So that is a fee that you will pay at time of closing in order to get your financing in order, if you are using financing. Second one, this is not going to be a negotiable term at all. This is going to be dependent on what type of loan program you are using. So you see 2 options up there. One of them is going to be what's called upfront MI, or upfront mortgage insurance. So when you put less than 20% down on a property, you are going to have you're going to pay private mortgage insurance or mortgage insurance on that until you get to that point. With an FHA mortgage specifically, they're going to also add an upfront funding mortgage insurance. So upfront MI is going to be included. That is going to be for FHA mortgages as of the recording of this video in early 2025 is going to be 1.75% of the amount that's financed. So that does get added to your closing costs. You're going to pay them upfront as well. The second one is going to be a funding fee. For VA loans or USD loans. So now these are basically a one-time fee that you're going to pay at time of closing, or you can actually roll the VA funding fee into the mortgage as well. And again, it's either going to increase your balance or increase your closing costs on that. Next one is going to be a completely optional one, and these can get really expensive depending on what you want to do to your rate. So you have the option, if available to you, to change what your rate is going to be on that mortgage, and you're going to pay for the privilege of doing that. So depending on, how much you want to pay additionally on closing costs, maybe, you may look to reduce the interest rate that you're going to pay over that loan by buying that rate down. That's going to cost you at the time of closing. And again, they'll roll that into the closing costs. And then finally, the lender is going to want to make sure that they have a, know that you are in a flood zone or not in a flood zone. They're going to get what's called a flood certificate. And this is just a one-time report saying, hey, that we know that this property is not in a flood zone. Usually pay about $30 to $45, maybe $50 for that. So that's a pretty small one, but it is included in that. And that one's not going to be a negotiable fee as well. So that wraps up your lender fees on that section. So that is part one. That's going to be your lender costs. Again, some of those are going to be negotiable depending on what lender you're using. Some of them are going to be fixed fees depending on what type of program you have. But I think it's important that you have at least an understanding of those. So the next thing we're going to talk about are just the government charges that are going to come along with this. And you're not going to see a ton of these, but they are important because they do sneak up on you. Again, if you're not expecting them, which watching this video today, you will be fully aware and ready of. So the first one is going to be a recording fee. So if you're getting a mortgage on a property, there's going to be a fee to record the mortgage, the lien on that property to secure the mortgage holder's interest in that property. You're also going to have a deed recorded that is going to make sure that you are the owner of that property. So those two, usually in North Carolina, they're somewhere between $90 to $120, depending on what type of documentation that needs to be recorded with that, or if you're getting a possibly, if you're using like a down payment assistance program or something like that, they may have an additional mortgage that is secured with that. So depending on the number of security instruments and the deed, you're looking at somewhere between $90 and $150. Not a ton amount with that. And then the first kind of variable, depending on where you close in the year, is going to be prorated property taxes. So if you buy a property kind of later in the year, it's most likely that the seller has already paid that year's entire year's worth of property taxes, depending on when their tax bills come out. So you're going to pay a prorated portion for whatever is left in those taxes that were paid to the seller, or you're going to prepay. Or if you buy early in the next year, the seller may actually give you a credit for time that they owned the property and hadn't paid taxes for that yet. So depending on when you fall in the year, you may get money or you may pay some additional money as additional closing costs, depending on when you buy in the year. And then the final one, as far as government fees for the transfer in North Carolina, it is $2 per $1,000 of sale that is going to be collected in what they call tax stamps. So a lot of times in most resale transactions, those are costs that are paid by the seller. However, sometimes with new construction, they have it in their contract that you will actually pay those at time of closing. So if you're buying new construction, make sure you're checking who is going to pay the tax stamps on it. Again, most of the time I found with new construction, especially here in North Carolina, that is going to be the buyer that is going to pay that cost for the privilege of buying a new house. So that is your government fees. Again, not a ton there. Let's hop right into the next section, which is going to be your prepaid expenses. So as I mentioned, this is kind of the one that I have found in my experience is that this is the one that throws buyers off the most. So the way it works is, again, dependent on when you close in the month is going to change how much you may pay for some of these prepaid expenses. But no matter what, when you close in the month, there's going to be some expenses that they're going to start collecting for you for the next time those are due. So let's hop right into those and see what those look like for us. So your prepaid expenses are going to be, the first one is going to be your prepaid interest. So you can kind of control this a little bit depending on when you close in the month, but let's just say you close on the 15th of the month, you're going to pay the interest for the entire rest of that month. So you're prepaying the interest for the rest of that month because the way mortgages work is you're actually paying a month behind them. So let's just say you close on April 15th, you're going to pay interest, daily interest from the 15th until the 30th of April. And then your first mortgage payment on that is actually going to be due June 1st. So you won't have anything for May And then on June 1st, you'll be paying all of May's prepaid interest as well as a little bit of a portion of principal. So that's the first expense that you're going to have as far as prepaid expenses. The next one is going to be your tax escrow. So if you're setting up an escrow account, which most people who are watching this video, I'm guessing, are going to have an escrow account. If you're using, if you're using other people's money, and especially if it's under 20% down, they're going to make sure that you have an escrow account. An escrow account is just where they are collecting the taxes and insurance to pay on your behalf when those become due. So at closing, they will collect as much as they can to basically start building that escrow account for you. So that when those tax bills become due, they have enough money in that account to pay on your behalf to the county or the whatever your taxing entity is. Next one is very similar to that, is going to be your insurance escrow. So this is where you are going to have an insurance escrow for the same thing as the taxes. So what they're going to do is the last bullet on the screen here you'll see is at time of closing or outside of closing, depending on how you work it, you will actually pay 1 year's worth of homeowners insurance up front. So that is to secure the homeowners insurance for that first year of ownership. And then at closing, they will also collect some escrow, so they start building the account for that, for your homeowner's insurance, so that they can pay it the next year it becomes due, and they make sure that they have enough in their account. So those are your prepaid expenses that you're going to have. So you have prepaid interest, tax escrow, insurance escrow, and homeowner's insurance. And again, as I said, that is one of the places where I find most people get surprises and are thrown off by closing costs. So how are we doing so far? We're at 12 minutes. Take a break, take a breath. You can get this. I like this. Again, you can pause this, save this video. My whole goal here is to make sure that when this time comes for you, you are comfortable and there are no surprises. I know there's a lot in the process, and that's why having a real estate professional like myself is so important to help guide you through this process. This is what I do day in and day out, so you have that person in your corner representing you in your behalf throughout the transaction. So let's finish strong here with explaining the closing costs, and then we'll talk about what you can do about them. So the next thing we're going to talk about is going to be those professional expenses, those professional services. So these are services that you're paying for other professionals to help you with the real estate transaction. The first one is going to be your real estate agent compensation. So when you decide to work with a real estate broker like myself, we're going to sign an agreement which goes over how I am going to be compensated. Now, I will be completely transparent with you. This is negotiable completely. It's not a set amount. You can negotiate it from broker to broker. You can negotiate it with that broker. My goal is also to have the seller pay that for you in one form or another, whether it's through a seller concession or they just outright decide to pay at time of closing for the buyer agent compensation. That is always my goal, and there could be some additional out-of-pocket expenses of that, but our goal is to negotiate that into your closing and the purchase price as well. Next one you're going to pay is your closing attorney. So the lender is going to require you to have an attorney to close on that mortgage, to record the deed, to do the background title inspection, title search to make sure that the sellers can actually sell that property to you. This is going to be what you're going to pay for a closing attorney. Now, some attorneys just charge kind of a flat number, and that includes kind of all of their services. They just put one number together. Other attorneys are going to kind of break out all of these individual things they do, but they kind of usually add up to the same ballpark area. On average in North Carolina, at least in the areas that I serve in the Raleigh Triangle market, as well as down at the coast, you're looking probably somewhere between $900 to $1,250 for closing and title services. Again, those vary a little bit from attorney to attorney and some of the services that you're getting. If you're getting a mortgage, the lender is also going to require you to get title insurance. So this is basically an insurance policy that you pay one time in the life of your ownership of that property to ensure that the lender is covered if there are any types of title claims or anything against that property. So the one-time fee that you're going to pay that is going to be at time of closing, and it's going to cover the lender's interest in that. So that is, usually the larger portion is going to be the lender's portion. The second type of title insurance is going to be an optional owner's policy. And I say optional, but I would highly, highly, highly recommend you take that option when it is given to you at time of contacting with the closing attorney, who's going to be most likely handling that for you. So that's going to be an optional fee, and that's covering what your portion is. So whatever your down payment is in that, again, that's the title insurance that's going to cover your portion. It's usually a lot cheaper, and it covers, your interest in the property as that grows and grows and grows over time as well. As I mentioned earlier, you are going to pay that upfront year of homeowners insurance. You're also going to pay an appraisal fee. This is usually collected by the lender ahead of time. Sometimes you can get them paid at time of closing, or sometimes if you pay up front, they may give you a slight credit for actually getting to the closing. I've seen some lenders do that, but that's what that POC means. That means it's paid outside of closing a lot of times. And then the last one that you have an option for is going to be to purchase a home warranty on it. So especially if you're buying a resale property, it is a great idea, in my opinion, to purchase a home warranty on it. It's going to cover a lot of the major mechanical services through the year. You can buy an upgraded package that's going to cover a lot of the larger, HVAC services and the heating and cooling for the property. I think, again, if you're jumping into home ownership, I think it's a great value to just not add that extra level of stress and things that can go wrong when you've already put so much money into this property. And a lot of times, especially for first-time home buyers, they put a lot of their resources, maybe even all of their resources, into home ownership. And these little things that come up when they're in that first year can, really break that entire budget there. So how are we doing here? As we move through our professional services, that is kind of a breakdown of all of the closing costs here. But I do want to finish with, what we can do to help minimize some of these costs. So, the bad news is they add up significantly. You're looking at somewhere probably between 2 to 5% out-of-pocket expenses for closing costs of the entire purchase price. I use that as a ballpark figure. As you get through the process, you'll start negotiating a lot of these terms on your behalf as well. But I do like to, kind of make sure that buyers understand that this is an expense that they are going to have, is going to be in addition to the purchase price. So let's finish here with what you can do to kind of negotiate and shop for some of these services. So last thing here, we've got what can we do to reduce these closing costs. So number one, the easiest one is to adjust the closing date. So the closer to the end of the month that you close, the less fees that you're going to have, because some of those prepaid expenses are going to be minimal. So if you remember back, we've got daily interest that's going to be lower at the end of the month, and you also might have some prorations that are going to be lower at the end of the month. Second thing that we can do is we can ask the seller for some credit. So as long as the property appraises property and there's enough room there, we can have the seller contribute to some of these closing costs, especially the real estate buyer agent service compensation, and again, even maybe some of your closing costs on top of that. It's completely negotiable. Is it going to work every time? Absolutely not. Is it going to work in every market? No. In most markets, it is going to work where you're going to be able to negotiate some form of seller credit, and even if it's an increase in the purchase price of that property. Third one is going to be some lender credits. So there's some movement that you can negotiate with your lender as well. Sometimes you can actually, let's say you can use those lender credits and actually pay. Maybe you decide to choose a slightly higher rate. Maybe you just choose to get an eighth of a point higher. You may see some form of lender credit there as well, so that you can use that to pay some of those closing costs. Then there's also some grants that are available out there, especially for first-time home buyers. Dependent on a lot of variables that go into that, but I would highly recommend. I've done a whole video about that as well, about first-time home buyer grants, and those options and those programs are phenomenal out there. Not everybody's going to qualify for them, but you owe it to yourself to at least investigate them. You also can talk to your agent, and you might be able to negotiate some form of rebate with them. So I will talk about only myself and the business decision that I've made. So from time to time, especially with new construction, the builders may be offering some incentives or a little bit of a bonus or an incentive, or maybe a little higher than what I have been signed in my buyer agency agreement with you as the consumer. What I do with that, anything that I get above and beyond, or that I'm offered above and beyond what is in our contract, I actually choose to, I made that business decision to offer a client rebate for half of that amount that is over what I was expecting to be compensated. So let's just say, as an example, we are under a contract that says, hey, you're going to pay 3% of the for a buyer agent compensation, and the builder is offering 3% plus a $5,000 bonus. I will actually credit you at time of closing $2,500 as an agent rebate. Because I feel like that extra bonus can go to help defer some of those closing costs for you. And then finally, shop around. You don't have to go with the first person that you choose with. You choose, just like everything else though, be careful. Sometimes you pay for what you get. So if you see someone that's a discount broker on an agent side, or they're going to give you 60% of their agent compensation they're going to give back to you, you may not be getting the best agent. If it's going to be a lender who's going to give you all sorts of crazy amounts of credits and rebates, there's something that they're not offering there. Maybe it's a lower service, or they've bumped up your fees somewhere else. So just be careful of all that. Shop around, especially, again, going to homeowners insurance. A lot of insurance companies will offer a discount if you bundle home and auto, or home, auto, and boat. They have some kind of bundled discounts and services available to you there. So that's what we have for closing costs. Thank you for sticking with me to the end. If you like what you see here and you got some good content out of it, save this video, bookmark this video, give me a like and subscribe on the channel so that I know that this is the type of content that you find valuable, so I can create more content like this. Thanks for watching, and hope to talk to you soon.